Hi and welcome to this week's Insights video. There's quite a lot of key economic data releases this week and corporate earnings that could significantly impact the global markets. We'll take a closer look at inflation data from Canada and the UK and the US, all of which comes just ahead of major central bank updates. Plus, with earnings season heating up, we'll see how the results from Tesla, Netflix and other major players might shape investor sentiment. So let's dive in and we'll start with Canada's inflation rate. That's going to be released on the 21st of October at 3:30 p.m. GMT +3, just ahead of the Bank of Canada's interest rate decision on the 29th of October. Now, after the stronger than expected jobs data released on the 10th of October, analysts are split. Some say the bank should pause rate cuts, while others argue that one good month isn't enough to change course. Now, in September, the country added 60,000 new jobs, far exceeding the forecast of just 5,000, while the unemployment rate held steady at 7.1%. September's inflation rate could increase market volatility. Analysts believe it could rise above 2%, making it more difficult for the Bank of Canada to decide whether to cut the rate. In August, Canada's annual inflation rate climbed to 1.9%, up from 1.7% in July. Still below the expected 2% and under the Bank of Canada's 2% midpoint target for the fifth consecutive month. The report added to market uncertainty and triggered significant price swings. So traders should be prepared for another potential spike in market volatility and have their risk management strategies in place. Next, and it's over to the UK. The UK inflation rate for September will be released on the 22nd of October at 9 a.m. GMT +3. This will be the last inflation report before the Bank of England's interest rate decision on the 6th of November. Now, in August, the annual inflation rate held steady at 3.8%, unchanged from July. The figure met expectations, but led to a weaker British pound. If the upcoming report again meets or falls short of expectations, we may see another short-term dip in sterling. And it's worth noting, people such as the IMF this week have been talking about the UK may well suffer from the highest inflation rate of developed countries for the rest of this year and potentially into next year as well. So these figures could be quite key. Now, to close the week out in the UK, markets will turn their attention to UK retail sales on the 24th of October at 9 a.m. GMT +3. In August, retail volumes rose 0.5% month on month, matching July's revised increase and beating forecasts of 0.3%. Over the 3 months to August, sales slipped 0.1%, a slower pace of decline than in previous months. However, year-on-year sales rose 0.7%, easing slightly from July's 1.8% increase. As a result, the pound weakened against both the US dollar and the euro. Now, this time traders may look beyond the headline month-on-month number and evaluate the broader data mix before positioning themselves. So keep your eyes on all of those figures and look over the long term and the short. And now we go back across the pond and the US. The Labour Department's monthly inflation data, originally set for the 15th of October, has been postponed until the 24th of October. Now, this makes the market release even more critical, given that the Federal Reserve's next interest rate decision is scheduled for the 29th of October. Now, markets currently pricing a 98% chance of a 25 basis point rate cut, but a strong inflation print could trigger some uncertainties. Fed Chair Jerome Powell recently said that the central bank is now relying on private sector data and anecdotal reports from businesses to gauge the economy, far from ideal. Any further delay in the report's release may trigger abrupt price swings as traders adjust their expectations. Now, in August, the annual inflation rate accelerated to 2.9%, the highest since January, while core CPI remains stable at 3.1%. Now, rising prices for food, used cars and new vehicles have kept inflation sticky. If September's figures surprise to the upside, we could see renewed USD strength and a spike in short-term volatility. It's also a busy week for corporate earnings. Investors will be watching results from Coca-Cola, Procter & Gamble for insights into consumer demand, while Tesla, Netflix, Intel and IBM will shed light on innovation, AI and digital transformation trends. Now expect heightened volatility midweek, October 21st to 23rd, as these tech heavyweights report within a 48-hour window, potentially steering Nasdaq and the S&P 500 performance heading into the month end. Now that's all for this week. Key inflation reports, upcoming central bank decisions, and a packed corporate earnings calendar featuring leading names in the tech and consumer sectors will set the tone for markets this week. Now, with all of these developments unfolding at once, volatility is likely to remain elevated across pretty much every class. Stay informed. Check out the news analysis section on the FX Open website for real-time updates. And as ever, we wish you luck with your trading in the week ahead. Bye for now.